right? Remember now, you have a day to look at this time frame. You have a day, right? Or maybe a few hours. But let's say now we go to a lower time frame. Let's say now we go to a 4-hour time frame, right? And we still see that same trap. That same trap still is there. The only difference now is that we have now liquidated who we've needed to liquidate, right? So once this takes place, right, you want to start going to a lower time frame, because remember now, right, on a 5-minute or a 15-minute time frame, you want a 5-minute break-in. So you want to see a candle that would be closing sooner or later. So if we're looking over here right now, I can't see it, but normally you would see a candle right over there. You can then see, right, that if we look at the side over there, this is now going to show you when the next candle is going to open up. So we're running down this candle, so we've got 17 minutes, right, and 26 seconds, right, before the next candle opens. So what you want to do now is, at that same level, you want to start going into a 15-minute time frame. On a 15-minute time frame, I've got 2 minutes before the next candle opens, right? On a 5-minute time frame, I have 2 minutes before the next candle opens. So what this is giving me is, this is identifying how much time I have to get into this move. So let's say we were going to this high over here, right? As you can see over there, once again, another trap on a 5-minute time frame, right? But what I'm looking for, right? What I'm looking for is for them to take liquidity. So what they do is, this is just a little, how can I say, a strategy that I run with, right? So obviously they come in, so we see them trap these guys over here. So obviously there's liquidity sitting at this level. Price then comes up, traps these guys, right? So we trap these guys, because remember now, this here is the wick, right? This is now the wick on the daily time frame. This is now the wick on the 4-hour, right? But we're on a 5-minute time frame, right? So we got 2 minutes to get involved in this market, right? So price now comes up, right? So price now comes up and liquidates. Now, obviously in my mentorship, I teach people how to get involved in this and how to get these sniper entries, right? So obviously now, as this happens, right, there's something called Sasha. It's a little strategy, but we would roughly get involved somewhere over here, and everybody in the mentorship would know this, at our 88 level. So we would get involved somewhere over here, and I would then put that, I would put a line through that just to show where we would be getting involved, right? So we would be roughly getting involved over there. Now, remember that this is now a 5-minute time frame. So we've gotten a trap once again, showing us that the larger time frame is in line with the smaller time frame, and the smaller time frame is in line with the larger time frame, because we've gotten a trap over here. But not only that, we now have a trap on the daily. So if we go back to the daily time frame, right, where we had our trap, no, so where is our trap? There. So this is now where we would have gotten involved. So as you can see over there, that is where we would have gotten involved in regards to this market. So we would have gotten involved by that gray level, which would then give you a sniper entry, right? Would then give you a sniper entry as we take out if you look over here, you can then see that we would have gotten involved right over somewhere here. So let's actually take that out, right? Let's just try get it out over there, and rather just draw a line somewhere over here. He said, well, let me draw a line, but we got in somewhere over here. So let's see if we can go back to a 5-minute time frame, just so we can obviously see where we got involved. So obviously here, we're looking for that high. I'm going to go back to a daily time frame. I'm going to go back to that high where we got that trap. And I'm just going to, right, okay. So let's just say we got involved over there, right? So on a 5-minute time frame, well, let's first go to a 1-hour time frame. So on a 1-hour time frame, we would have gotten involved over there as price liquidates, or that the early buyers on the daily time frame, and that would have been your sniper. As you can see, we get in right at the core of the move, and price then pushes lower. Right, so this is just a little bit of an understanding on what a trap does. So obviously you can see over here, price traps the buyers and the guys trying to push the market lower right over there. And as you can see, price then moves up. Over here, once again, you can see trap. We get that trap, and with that trap, even right at the end of the move, there's always a trap. So obviously there was a trap sitting over here, right? So let's look over here. Here there was a trap, and as you can see, the trap then led to that massive buying opportunity, right? And you know, this just gives you an understanding of how much you can actually get if you had to get into a move like this, or if you saw a trap occurring on a larger time frame, how you can try to get involved within that trade and actually catch a good amount of pips, a very good amount of pips, in fact. But yeah, I just wanted to come and kind of like elaborate on the trapping and the inducement, and you know, when they come in and they purge, you need to be aware that they're coming in to purge. So over here now, right, we can already see that they trapped, right? But now that they've trapped here, right, now that they've trapped over here, right, what do we want to see? Right, we want to make sure that price starts to reject that trap, because what you don't want to see is price going lower than that trap, because then we need another trap. So price could trap multiple times. So price comes down over here, we then get this trap, right? We then get this trap. Oh shit, what am I doing? Right, sorry. We then get this trap over here, right? And then what happens? Price gets a rejection of this trap, which then shows momentum to the upside. All right. So what you want to look at is now the fact that we have a trap. So price was trapped at this level, and now price is trapped at this level, right? So you can play in between this region. You with me? You can now play within that region because obviously we have a trap to the upside and to the downside. Price is trapped both ways. So once price puts in a trap, once price comes in and purges either being early buyers or sellers in the markets, this is telling you that either the move could be over. So once again, if we look over here, price traps. So it gives you, look, it gives you a decent amount of pips. So over here, price traps, right? Price comes in and price traps, right? Then price goes up, right? Price goes up, but we don't get a trap. We don't get a trap. So this is obviously liquidity. Then finally price comes down, but you see, it fails this trap. Price fails this trap, right? So this is now another trap. After you've made your money, liquidity is generated, price comes down, but we get that trap. And as price traps, you want to get involved over here, right? Because even if you got involved over here, price didn't come lower than this low. So even if you got involved over here, they come down just to scare you enough to get you out, right? And then what happens? We get that massive move to the upside and price pushes up. So always understand that when there is a trap, right, you can expect price to go higher. Over here, once again, price trapped. What happened? Price went higher. And not once, if you got in over here after the trap, did price ever come down to this level, right? And every time that happens, price has never come down to that level, right? So again, look over here.